Hi guys! In this video you will learn how to use the powerful Fibonacci retracement in trading. It will help you to understand trending markets and to find turning points that are really high potential for trend continuation. So stay tuned till the end, really miss out something if you don't know how to use it. So let's start right away. We have a clean uptrend here, making higher highs and higher lows. Accumulation, distribution, accumulation, distribution. And for better understanding of the trending markets, we use now the Fibonacci retracement because it shows us where the high potential turning points are and if the market is likely to go up further. So let's use it. The Fibonacci retracement you use from the last trending movement from the lowest price to the highest price, and then you make it a little bigger, and then you can see how far the market came back. So you see here between 38 and 62%. This is where Fibonacci found out from historic data, so it's based on experience. So as you can see in our example here, the market came down between the 50% and 62% line and then turned around and went up further. So now let's have a look at a second example. We're applying our Fibonacci retracement, up here, again from the last low to the last high because we're in an upwards movement, and see if there's a good entry in this scenario. So we have a resistance area over here where some people might get nervous now about already going into the market long because they are afraid to lose the perfect moment to get in the game, because they are afraid of getting into the game, because they're afraid of being too late for the right moment to get back into the game and going long. But it's not about being the fastest. It's about finding the most highest potential turning point for an entry. And we haven't even reached the 38%. So for us, it's not the time to enter the market yet. Let's see if the market is moving further down. And yes, it is. Let me make this a little longer. So, and we're reaching a level between the 50 and 62% again. And now let's go a little farther. And right there, it dips down a little bit, but then you see there's building a resistance level over here at 3 points already. And also we have a candlestick pattern here, a bullish engulfing candlesticks pattern. Plus, the engulfing candle is having big momentum, engulfing the last 12 candles. So this pattern plus the big momentum up, plus the market came back to our level of 62%. This makes it a really good entry for a long trade. Now let's see if it would have worked. So you see, it wouldn't have been a fault already entering here, but it's not really good confirmation at this point. So if you wait and use the Fibonacci, so there's a lot more possibilities to confirm your entry, because as I already said, it's not the goal to be the fastest in the market. It's the goal to only use those turning points with the highest potential of continuing the trend, where we have the ABC movement. So A is the first initial impulse, followed by B, the first pullback or the corrective wave, and then our continuation in the trending direction. Now let's make a last example. the trend is moving farther upwards, and we see there is a pullback starting. So we take our Fibonacci retracement and see the market is coming down to 50% of the initial impulse wave. And with the next candle, wow, there's coming big momentum down. This big short candle is coming down to more than 80% of the initial impulse upwards. And this is telling us, additionally to the big momentum of that single candle, that this is not the point to enter a long trade anymore, because there's too much power pushing down at this point. It is an indication that there could be a trend reversal due to the strong pullback and the strong momentum gaining in the candle. So let's see how the market continues. It's going sideways first and then making its way down farther. So you see, if we would have entered the long trade here, it would have failed. But what's really important to tell you at this point of the video again, also like every other tools and indicators in trading, there's never a guarantee But let me tell you at this point again, like in every aspect in trading, in Fibonacci retracement, there's also no guarantee that it works for every trade and every setup. So there's no guarantee if the pullback comes down to 38 to 62% that there's a continuation of the ongoing trend. There's no guarantee that the market is turning at that point. Only a tool to find the highest possibilities for the turning points. Keep this in mind. Now we reach the end of this video. I hope you really enjoyed this video and this content, and I hope you have fun trying the Fibonacci retracement now for yourself and find your own way to use it. So please leave me a thumb up and a subscription to my channel for more interesting videos to come up. And if you have any wishes for the further videos, please leave me a comment and see you soon.